Hello, mate! In today's video, we will analyze Tesla's stock chart and fundamentals. There's a unique opportunity to buy right now, so stay tuned, and let's go! This is the 1-month chart. Each colored bar, or candle, that you see on the chart represents a month of Tesla stock trading. The red candles are months when there was a devaluation, and the blue ones are when the price appreciates in that month. I'm using the 1-month chart because I want to do a big picture analysis and think about the long-term action. For that, 1-month chart is best. Now I've added a price moving average, which is the black line. I configured the average to calculate 60 periods. Therefore, the black line is nothing more, nothing less than an average of the prices of the last 60 months, or in other words, the price average of the last 5 years of trading. The 60-period moving average is the most important moving average when analyzing monthly stock charts. And the insight I want to present to you today is quite simple: the return of prices to the moving average before a new expansion phase. When the prices of a value asset, after going up a lot, return to their average value, usually the number of buyers of that asset increases significantly at that moment because they are now having an opportunity to buy that asset without paying too much. At that moment, buyers believe they are having the opportunity to buy the asset at a more statistically fair price. After all, it is the average. But, if you doubt the importance of this 60-period average price region, on the monthly chart, I'll show you examples of other stocks from other companies so you can better understand what I'm talking about. You are now looking at the monthly chart of Coca-Cola stock. See the times when, before a new expansion, the price needs to go back to the 60-period moving average to start gaining traction and go up again. See the pattern. It happened in 2015, in 2017, 2018, and again in 2020. Now, look at AMD's monthly chart. See what happened to prices after they finished the cycle of going back to the 60-period moving average. Now look at Alphabet's monthly chart. In case you didn't know, Alphabet is the company that controls Google. See that, at the end of 2022, prices touched the 60-period average, and since then the company has accumulated a 45% increase in share prices. Want one more example? So take it. Take Visa stock, which is also rising after returning to the moving average. Want another? So now Home Depot stock. See the big move-up prices made after touching the 60-period average in 2020. And want more? So now I show you the Oracle charts. Look what happened after prices returned to the 60 average at the end of 2022. Look at that. After all these examples, we're back to the Tesla chart, our focus for this video. Now do you realize the size of the opportunity that our eyes see in this chart? But I'm going to delve a little deeper into the candle moves so you get a sense of the dynamics of trader strength. Note that, after reaching the 60-month moving average, buyers became active and were able to print 2 blue months in a row. 2 blue months in a row haven't happened in Tesla stocks since October 2021, that's almost 2 years ago. This could be a sign of a change in the mood of buyers, who are showing more momentum to dominate the market. And lastly, see that last month, sellers again tried to show strength and delivered a red candle, but see that they failed to impose a straight. And now, in the month of May, buyers have dominated again. And see that recently, every time there was a red month, sellers always had enough momentum to print a new red month in sequence. The last time a red month appeared, and it failed to follow up, was in May 2021. So what happened now, is that for the first time since 2021, sellers failed to impose 2 red candles in sequence. This shows the possible turn of mood of the market and price direction. And finally, we'll talk a little about Tesla's fundamentals. After all, there's no point in doing graphical analysis if the company is a walking time bomb. The first thing we can say is that the debt-to-equity ratio has reduced from 189.1% to 3.6% over the past 5 years. Company debt decreases while equity has risen substantially. And that's great! Tesla has more cash than its total debt. Tesla earns more interest than it pays, so coverage of interest payments is not a concern. Tesla is forecast to grow earnings and revenue by 23.4% and 19.5% per year, respectively. With all this in mind, and remembering what we said about the movements on the chart, we can conclude that the current moment is potentially favorable for a purchase of Tesla shares, aiming at the long term. And what did you think of this analysis? Leave your comment below. We appreciate your feedback. If you liked it, please leave your thumbs up and consider subscribing to the channel to watch our videos, which will be of great value. If you want to see an analysis similar to this one, only made on Amazon, click on the link on the side. If you want to watch an analysis of why the Chipotle breakout can be dangerous, click on the other link. Until next time, bye.